Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and this is January 4th, 2024. Man, the years are just ticking by. All right, so here we are. NASDAQ daily. We've had our continuation as we've been predicting. Looking for a continuation down to these old highs here today. 62% retracement. Looking at E-mini S&P, they're starting to dip into their daily fair value gap as well. Dow's holding though. Dow still hasn't broken that order block yet. All the others have held or starting to break through them. Dow hasn't yet. So unless this one follows suit late and fast, this might be one to get into in a while. But we're at Thursday now, so don't forget this is non-farm payroll week. So if you're going to do any trades today, try and get them in before the afternoon session, and then sit on your hands and watch. This is a great time to start studying. We're still early in the year. We have plenty of year left ahead of us to nail the markets. So patience, people. I'll go through all of the charts this morning. So we're still looking for a downside in the indices. Let's look at the Dixie. So yesterday we were looking for, remember that imbalance we talked about? Look at that, right into the imbalance. Beautiful. So there's still another little tiny piece above that. The whole imbalance hasn't been played yet. So we might get one more run up into that area here at 102.50. And we might get one more run down into here, 101.79. So those are the two numbers I have in my mind for today. So we'll see how they react off of the 9:30 open, whether or not it starts tipping its hat towards running to the low, then taking the high, or taking the high, then going to the low. If we take this high with any sense of strength, we blow through 62%. We can look for a further run back into the SIBI on the side on this date here on the 13th of December. This breaker here extends all the way up to 70% optimum trade entry. So this would be an optimum trade entry if they leave that little portion open to come back down. Maybe even a full fill. Old low. There's old lows in here. There's a small little inversion fair value gap right here. So there's lots of draw on liquidity to the upside. There's also draw on liquidity to the downside. So can't give you 100%. You can argue both sides of this. So let's watch, see how that opens up on at 9:30. Maybe we can start getting more of a bias if we look at these other indices here, or other Forex markets here. How's it going, Cody? Holy smokes, that was quick. Good morning. So let's look at British pound. It's already hit the order block. Equal lows. So I've got more of a bias down. So that gives us our first indication that we may be running for that price imbalance on the downside or on the upside for the dollar. Looking for here again. Revisit that. We also have the mean threshold of this order block. Left is a PD array. We have equal lows. And this breaker here, it hasn't been hit at all yet. It was activated there. One pass. I like this idea of this maybe running back into, so we're really between this order block here and this breaker here. So if we start to lose ground and head to this, the equal lows here, look for this order block, this breaker here. Does it hold price? And we start to run back up again. So that's the small range that we're looking for in the American dollar as well. I like this. Equal lows. So more of a bias on the downside on that one. Yeah, these relative equal lows here look good. We have an original consolidation. Come back to the top of it, then break away. We've hit that breaker here on the hourly. Yeah, I like this return to consolidation here. That looks like a potential place for price to come back to. Let's look at euro. Now, see, euro's got some more distinctive. Man, we were calling for this yesterday. It was perfect. It's exactly what we called yesterday. Go back over the recordings. Fair value gap. Yesterday, we wanted to make a little, to finish, not fill this in. Today, came back over, just tagged the top of that, and we'll get a reaction off of that. So, if the American dollar continues to go back up to that imbalance that we talked about, look for the drawn liquidity down here at this daily fair value gap. Equal lows to be taken out in British pound. Gives me more of an idea that we've got a I like that we just took that little piece out there and then continue to go down. So I'm more bearish on this one as well. Equal highs here. Just took out those highs. January. Have I got the wrong contract here? Stand by. Is the only one available? Let's check this one more time here. February, March, April, May. We should be in the January contract now. 1 hour is kind of bullish. Got me, OTE. What do you think on the 1 hour? I'm just making sure I got the right time frame here. On the 1 hour in euro, well, you're in the near the middle of this range here. We've already come back to this old high here. We got a reaction off of it. So we have a little tiny gap sitting right in here, Cody. So we could get one more run into here. But there's little imbalances down here. Optimum trade entry would put you at 62, 75% puts you right in the middle of that BISI here. We've taken these highs out here, pulled back into the range. I'd wait and see what the open looks like. If you get a return back into, if you lose more than 50% of that wick, if you lose 62%, then chances are we're going to keep going down. So if we're looking at the American dollar still running up for those that price amounts we looked at, then this would drive price down here. Go into the British pound euro pair and look to see which one is the weaker one of the two, and base your decision off of that. If you're looking at the British pound might be a nice cleaner run down to, it's really, there's no big gaps available down in here for you. There's equal lows down there, that's about it. Yeah, go look at your British pound and euro pair, see which one is the strongest one out of the two, and that's the one you want to base your trade on, or do your own thing. I'm all right with that too. So we've come back to 50% of that range. The American dollar, if we're looking at that going back up again, we're looking at that driving into this triple high we've got sitting up here. So we're looking for that run into that. This would support going up. We've got a retest of that fair value gap below and the new fair value gap that was created yet from yesterday. You see that? We got a BISI here. That's yesterday's fair value gap. This now becomes inversion. Let me turn that into an inversion. You find support at that. This is what we were talking about yesterday as well. If we drive through this, come back and find support at it, and it'll drive away, then that becomes inversion, and we have further upside. American dollar, we looked at the potential for it to go. What do you think of the hourly? That's not Euro USD. I'm not looking at that. Oh, that's right. Here you're looking, because I can only trade futures on on this. I could look at, I'll look at USD in a minute. Let me finish through the rest of these first. Looking for support off of this daily inversion gap, that fair value gap that gives us a run up into these equal highs here, which is that price imbalance we looked at on the American dollar. Let's look at New Zealand dollar. That's continuing down. We had a fair value gap created today. We ran back up into that fair value gap. Now we're breaking down, looking for further downside. So that means American dollar still pushing for the upside. As American dollar pushes up, puts strength or weakness on these guys to go down. So again, more confirmation that we've got a probable run up in American dollar. What are we aiming for down here though? I'm going to put some lines on here. That gives us that price imbalance as a place to turn. Not that I'm trying to predict the bottoms, because I'm not. But I just want to see if there's an area of sensitivity there. Today, non-farm payroll's coming up. That's why you got to be careful. You don't want to start your year off getting your ass handed to you. No rush, folks. No rush. No rush at all. Japanese yen, again, US dollar, looking to run up inside that inversion fair value gap. Look at how it's just working that inside that gap. Came down, wicked it. The consequent encroachment, bottom, all the way through. Now look at the top. That's that last little piece on the weekly, or sorry, on the dollar. Back to that little price imbalance we talked about again. There's that small portion there. Small portion here. Oil. Do you like oil? How slippery do you like your breakfast? We have a alternate trade entry. Oh, I was calling for this area. And we just got above it. God, I love that. Just got above it. Now we're reacting off of it down. I like it. So, man, that was I almost got that one bang on. Look at the recordings yesterday and you'll see me talking about this area right here. And we just ran above it, come back down. So now, you want to get through 50% of this wick. If you get through 50% of that wick, I'm looking for a $1, $2 run today. Back down into here. We're going to be inside this wick perhaps. We can come all the way up to 75%, or yeah, 75%. But I'd like to see that start to, we've had a reaction off this level. Now I want to see it just slowly degrade down, because overall we had equal lows down here. We need to lose this order block on the way down. But right now we've got the middle. You take that wick, divide it into your partition it into your quarters, and if we lose 50% of it, you're looking for it to start digging back into that body. We've got downside here still on the hourly. Let's just run these highs out. It's nice. We run all these equal highs out here. back to this breaker here. That's oil, gold. If you're into gold, we just came back to, oof, that looks like an imbalance there. Let me look at this. The low is 44.5. High is 45.3. So I thought that's coming back to that imbalance in here. Reaction, we should get a play up to 50, 20, 50. If the American dollar starts to lose strength or gain strength, that means that this should roll over and come back down. Dig into this order block here, the mean threshold. So 20.43. Running for this fair value gap down here on silver. Order block. There's a little imbalance right here in copper. If you're into the metals. And if you're playing with palladium, 1022. 1000. Anyway, this fair value gap's filling now. And the old banks. Not getting much out of that. Futures. I do like the idea of this returning. To these equal lows here. Between here if we get price run up into here to get short. If it doesn't touch those, look for the top of this order block here if you're into trading commodities. So look for 3 points of entry. 1, middle, mean threshold, consequent encroachment, and the high. You don't want to see it fill low. If you want to see this continue down. Soybeans a bit choppy. The oil, there's some drawn liquidity up here in this fair value gap. Oh my. Look for the drawn liquidity down here in soybean futures. For drawdown. We're back to this consolidation, so look for more coffee futures up. And this, I still see this potentially returning to this old low here before running down. Sugar. Got nothing on sugar. No idea. No idea on sugar. And these guys, if you want to look at them. Get rid of these. All right, so we have consolidation. All that consolidation yesterday, and we've got, wow, let's get some, I don't know why this doesn't pop up in here every once in a while. I do like this Asia session, London, we broke below that. Usually you like to see it return back to the bottom of the Asia session right here before continuing down. Didn't get that this morning, we stayed off this low. We didn't get this order block, we didn't get this order block. Wow. That's the 15-minute, 1 hour. Okay, here's our opening. Now, wouldn't that be nice if we finally get a return back to the Asian session or the midpoint of this regular trading hours? We're digging into the regular trading hours now. That gap. Turn to the order block. Continue pushing up. We'll see if this order block holds price now. Good. Continue on the upside. You got a fair value gap here. Don't forget to hit your on your settings, even though you have it set to auto on your YouTube channel, make sure you go in and hit the button and change it to high def. Auto, for some reason, it just comes in as a standard. It looks a little more blurry. So if you want a little more detail in there, you can go in and hit your high def button. It doesn't automatically jump in there for some reason. I've tried to increase the level of definition. I've looked on YouTube to see if I can increase the level of definition on this OBS system. And it just doesn't seem to be getting any more in depth than I was expecting. So there's that fair value gap we just looked at. We've hit that. We're reacting off of that now. Right into the consequent encroachment of that SIBI. Come all the way back down to the order block again, which is now the breaker, I guess, the main run up. Find support off of that. We want this order block to lose this order block here, the mean threshold. You want to see it close above that. So far it's good. We want to see that continue through. Oh, Cody, you're looking at Euro, right? I'll come back to this, but we're still looking for some more upside on that as a general retracement into 10 o'clock. Let me get Cody's euro dollar here. I'll switch to euro and go euro USD. A little imbalance right here, right to the New York Open downside. Then you have equal lows here. So as that American dollar pushes up into this imbalance one more time, just cleans that up. Look at that 62% for that today. We'll see how that reacts off of that. We also have the bottom here, which is the top of the fair value gap, bottom of yesterday's candle, and the top. We're getting a reaction off of this daily fair value gap high in S&P. Let's take this with all three of them. Let's get down to the hours on each of them, and we can kind of look at them all at the same time. Too many. put this on the hourly. A lot of equal lows sitting here, equal highs, equal lows, premium area. Let's wait and see. Chop on the 32nd. Let's give that 1 minute. Not a lot of the. I'm gonna try and change my color setup. This looks too blurry. Minute. Let's go to 15 minute on here. That ran for, what's the high there? 16.5. Ran all the way up to here. So the mean threshold we talked about, the consequent encroachment of that. Just over, yeah, just over the mean threshold, sorry, consequent encroachment of that gap, which is here at 16,496. We went to 16.5 for the high so far. Order block. Not a lot of see if we react off this order block here now. We've got this top of the fair value gap daily here. So if the bodies of the candles respect that, and we start to roll over and continue down, I wanted to see this give one more drive up into this fair value gap. Old lows, or recent low there, fair value gap, consolidation. Yeah, I'd like to see this push up into here one more time. and not just come into the mean threshold. Of that, the consequent encroachment of the daily fair value gap. It's hard to get a perfect beat on this one this morning. Non-farm payroll, remember? It is non-farm payroll, not for professionals. What's Dixie up to? Still slowly meandering back up to our area that we're looking for. That puts our British pound nothing's happening on that one just yet. There's 16 more minutes. Yeah, we're just waiting now till 10 to look for some. Let me have a look on here for Forex Factory. So let's see what that. I'm just playing with my filters right now on Forex Factory because there's a bunch of stuff on here I don't want. Apply the filter. So for our Forex Factory today, we have the euro dollar. That's all day. The US is already done. Unemployment claims is done. That's it. And then tomorrow we have some volatility in the market for sure. 8:30 unemployment. It's all in CAD. So we're all done for today so far. Okay. Forex Factory is missing some news. My FX book kept. Oh, let me have a look. Let's look for the news economic calendar. Okay. So FX, my FX book has this is just saying in 11 minutes. I don't use FX, my FX book, so wow, they got a lot more news here. PPE, wow. That is a ton more news. Well, these are all lows. Can you set filters on these, Cody? I don't want any of this low stuff. I just like the medium and high. Must be a filter up here somewhere. Yeah. Wow. None of them. Euro American. Lord. Okay, I'll set that up later. Yeah, I got that now. I see that's. I'll take some fiddling around for which one I want the most. The markets I really want to see in the news. I don't want to get every little bit of news. I just want the American markets. They make the influences. I want the Japanese, the big ones. GBP, Euro, NAS, the New Zealand, Australia, Japanese yen, the CAD. Those are the ones I'm interested in. Dixie, that slow, insidious climb up there to that spot we're looking for. Let's put all the markets on again. Well, we got 8 more minutes. What do we talk about for 8 more minutes? What's oil up to? Oil's still coming down the way we wanted it to. Michael's looking for a release of that big video. He felt like He had a nice little rant going on there yesterday. He thought it would be 2 hours long. It ended up being 4.5 hours. He's still compiling it. So, woo! This should be a long listen to when he finally gets that thing uploaded. US CAD. Yeah, we've had a nice reaction off the top of that daily fair value gap. Now an inversion, so we get a nice reaction off of that. So if this American dollar continues to run up, which is that little imbalance we looked at on the American dollar side on the Dixie, these triple highs here are looking for that to run out. Yeah, we've closed above any mean thresholds there. Nice reaction off of this 1 minute or 5 minute fair value gap. Come back, fill it. Nice reaction of the consequent encroachment FOMC wick previous day. So you want to see that 50% get taken for more upside? Or do we get this as a fair value gap forming in here on the hourly? Come down, tag it, then continue up at 10 o'clock. So look for that to be the wick, so the first 10 minutes into the new hour for the upside. Same principle here. What's the difference? What's the difference with these? I know they're going to have a slightly different feed. Some people are using but for the sake of argument, I'll put it on there. This is just your feed that you're using. Well, ICT uses that. Well, I haven't seen a heck of a lot of difference between there. We still haven't hit the 50% on any one of those feeds yet, but if that's what ICT is using, then that is what I shall use. We'll use the forex.com. Get these all set up, I guess. Make sure I've got them all in the same, talking the same language. So and as well. I think I went to this because I thought I was going to drop some money in a Canadian one, like a Wanda. Yeah, I went to futures because that's how I have to trade. If I want to trade, I can only trade in Forex futures on. I don't know if it was one of the feeds, like one of the brokerages. Yeah, I agree. We didn't take that 50% there. If we don't take the 50% or higher, I'll look for a run back into here, and then perhaps be careful that we don't have another push up. this fair value gap is the one that, well, for me, you're really between this fair value gap and that 50% of that wick on your decision whether you should go up or down. I think it's going to dip into here. Yeah. If this stays open, we're looking for more upside. Depends on how far you want to do it. You want to snipe that one, Cody. If you want to snipe it for some quick money, look at that fair value gap, high, consequent encroachment, and the low as either an entry or your exit if you've decided to go down short off of that. Then I'm looking for it to run back up and take these highs out. So we're at 10 o'clock now. $10:05. You keep your eye on that level right there. And I'm going to look and see what's up here. Well, there's your silver bullet entry right there already. Inside consolidation, not a big fan. These colors really wash this out. David, money. Massonet. Welcome, David. What are you guys mostly in? Are you in the futures, NASDAQ, E-mini, or are you guys more into Forex markets, gold? Oh, that's way back there. There's your silver bullet entry here, 10:03. Again, I like to wait a little bit until I see something that's what's E-mini S&P up to 1 hour. Let's go to the 1 minute. $10 o'clock. Impulse. 10:01 creates the fair value gap. 10:02 tags the edge of it, and off you go. Run those highs. I didn't see that one, but there's your silver bullet entry right there. And the fact that you broke out of that consolidation, I'd seen that one. That would have been a nice little entry right there. As soon as you clear that old high there, with the rejection block of that guy right there. Boof. There you go. You take some of your money off there. And that is 49. That's six handles already right there. You're in 4x. If there's nothing there till Monday or till London close, I switch to indexes. Okay, good to know. And my opinion is earlier. What's your That was a nice little silver bullet there. Didn't take that. Didn't see it. For NASDAQ, I still like these old lows here. This order block here. The fill of that fair value gap. Sorry, that regular trading hours gap. If we get a return all the way back into here, old lows, I'm looking to see if there's a reaction off of that next couple of minutes. I just want to get out of these ugly colors here. Looks so washed out. I think your ES is your cleaner one today. If you get a dip into, yeah, there's another potential entry right there. So run back, that's the first one you got. If you didn't catch this, that one actually doesn't even touch the bottom of that. We have, well, there's a tiny one there. We definitely got to reach into here. So I would wait for a discount range, come back into this here. Well, we're expecting this to go lower anyway, so we missed that silver bullet unless somebody else caught it. Good for you if you did. Let's go back to ES. On the 1 minute chart, 10 o'clock, there's your entry there. Yeah, this is nice and clean. Finding support off these order blocks. Back in on that one there. 2 minutes ago, another entry here. I like it. You want to see, just watch these to make sure they continue to provide support. 11, 13. Daily's reacting off of that. Just took out the lows here. Just dipped into that fair value gap, and now we're running back up. Looking for a return on this wick here. Fill of that. Rebalance this price. We've now taken out Asia and London highs. So do we get a reaction off of this here now, and we pull back into that range and start to run for this lower fair value gap? That might be a really nice entry to go short. Look for confirmation of that. Look for proof of that. Don't just take a random idea, because that would be keep that fair value gap open, and then a Friday run up, tag it, and drive back down. That this ended up being a small range day. Just an idea I'm bouncing around inside my head, that's all. So we'll see if this just holds today. Just kind of rolls over from here. Now that we've taken out that London high. That's 1 minute. Let me put that on 1 hour. Let me just check something here. Aha. I suspected there was one in there. 30-minute has a fair value gap in it. So we could see one more little drive up into here. Unless that's mean threshold. But look for potential run up into this fair value gap here on the 30-minute now. This becomes interesting here. How do we play inside here? Then keep an eye on your 15-minute ones. There's your 15-minute fair value gap there. We're at the consequent encroachment of that. 30 minutes your fill here. Same as your 15, I suppose, so I'll get rid of that one. This is reprice rebalance, so potential is to run all the way up to 47.60, which is that high there. So I'll look for the high, if I push up into here one more time. Then I want to see how it reacts off of that 15-minute fair value gap here. Equal highs. If you're running for higher prices, you want to see this kind of hold now and start to move back up again. What are we at here? 19. Dip down into here. Let's look at this one here on the 5. Just ran the highs. If we can get back into here, that's a silver bullet on a 5-minute. 10 o'clock. That would be a optimum trade entry. %62% puts you right in here. Yeah, you want to see that pull back into here if you want to go back up again. I'm just looking for this fair value gap to either hold price or does it become an inversion? As you can see, I like to play a lot of the inversion side of things. Fair value gaps turning into inversions, providing a level of support. I'm just going to kind of watch and see how these levels provide support. So look for that there to react off of here. Mean threshold. So we've hit the consequent encroachment of this fair value gap. You're going to see a level of reaction off of that. This order blocks the next one to reach for. We hit it. So now the next level is inside that fair value gap. One more time. Or the fact that we're reacting off of that, I like the fact we're going to continue down. I want to see that kind of blow through here. We've hit the bottom of it now. It's filled. we validated this order block here now. So if it's following the premium and discount arrays, looking for specific arrays, we want to see it get out of here now, or it's going to start to return all the way back up into this guy, these two guys here. Now we've got a nice body down below it. Good. So now we've broke. See how we've actually only wicked below it. So just watch the wicks can do the damage. See if this order block holds now. See that? See the reaction you get off that right away? Now you want to see a body get below here though, not just a wick. Remember Michael says wicks do the damage. So we could just continue to run all the way back up into here now. This could be the continuation to the upside. What's Derek saying? Ah, good morning, Derek. Bullish breaker there may not come back to that fair value yet. Are you talking about the E-mini S&P, or are you talking about Cody's trade? So there's the return to that order block. Now you want to see a body get through here, and it's down there. Now good. See, that's the thing you're looking for. Those three bearish down candles. I think he's looking for, he's talking about his Euro trade. So far we're seeing price reacting nicely off the levels, looking for, as soon as we hit this, you're looking for a premium, back into that little premium, 50% of the range. Look at this order block. Does it hold price now, this mean threshold? We've got one wick body below, or one body here below that low. So keep your eye on that inversion fair value gap now. That's the high of it. So where see it pops on it, reacts off it. It doesn't mean to say it's not going to drive through, but just look at those areas of sensitivity that it popped through, came back down. So we'll see where that closes right now. In 22 seconds. Closed right on it. Opened on it. So we're looking at this guy here. at the bottom of that. I just thought they were going to come into the body and then the low. They took the low right away. Okay. Around these little equal highs. Oh, you still might get it. Should see a turning point here. Within the next 7 minutes, we should see a turn. Preferably the next 2. So that reaction of that inversion now. We're going to dip into this and then run back up higher. Here's the fill of that. Look at that working that whole inside of that fair value gap inversion now. Slight gap down, a little imbalance in here. I wanted that piece. Look how short I was there. Just fraction short of where I was thinking it might go to. The potential's still there. Good morning, lovey. Thank you for my coffee. She's such a love. Teachers are still off school for another few more days. Been very fortunate. Keep getting my family. Parents are out here still till the 9th. Get to spend a whole month with my parents. This Christmas time is an awesome time. And my wife gets to be off work until the 8th. And she's back to school. So you see that inversion fair value gap. We have a lot of chop going on here. So we're looking at the next 4 minutes or so for us to create a swing point. This candle's doing what I thought this candle would be doing, just coming back into tagging the midpoint like this of that consequent encroachment of that fair value gap there. But we ran all the way back down and tagged that. Okay, there, now we go. So we're now blowing through the mean threshold of this. These two candles are what threw me off. I was expecting this thing to happen on that candle. But it ran all the way down inside that fair value gap inversion, which is fair enough. Come down, then it came to the mean threshold. It's run all the way up through this. We have to see this close above here, mean threshold, to continue up. Otherwise we got this whole rolling over consolidation all over again. Remember the level I was pointing at right here? Bodies of the candles are respecting that. Now if we get short, I want to see it blow right through here now. If we find support off of that, then you look for potential higher prices. See, when you can argue both sides of this, you stay out of it. Remember me saying there was a swing point coming? There you go. So now you want to see this run all the way below here through this thing now. You want to see it get some legs to get through here. This could be a potential swing point as well. See that mean threshold hold that. So you're looking at this candle here. Does it hold price? Nope. We're coming back up into this guy again. That's why you love consolidations. You can bash you around pretty good. Could argue up, argue down. Oh, that should do it. We don't have another swing point for another couple of minutes yet. We get some legs here now and start blowing through this thing. Look in here. I'm going to paper trade this one short here. I'm not even going to actually trade it. This is just pretend paper. Stop loss will go up here or here. You have to kind of stick to your rules, and my goal this year is to try and stick to our rules and not chase price and react. And if I say I'm not going to get doing any trading, I'm going to stop and not do trading unless there's something blatantly obvious. This is too consolidated, too choppy to actually trade. So I'm putting a pretend trade in here. Just because I'm thinking it could go lower. I'd like to see that order block whole price. Now I want to see this start getting some legs here and get through that, blow through that inversion. Come on, get through there. And then I would take on my pretend paper trade. I would take a little piece off here, a little piece off here, and then finally a big chunk off there, just because this is so crappy bouncing around stuff. If it breaks that low, I'd move to break even. As soon as I take a portion off, I'd move to break even, and almost dumped my coffee there. Just because everything's so tight here, you don't follow the traditional rules of hold on to your stop loss until the end. Oh, I see what he's looking at there. See how we're still getting this mean threshold here now? We're reacting off of that. So you can get beat up in these consolidations really bad. That's why it's paper. Pretend paper even. There we go. Get some legs out of there. See it find some support in here off that order block. Or you've got the body again. Just keeps running up through it. Mean threshold, rejection, order block again. See where that one closes. See how hard it can be if you're trying to read price inside all these consolidations? Like, man, you're inside this range here, from there to there. Right now, we're stuck inside this premium to discount range. Well, that would be taking out my paper. Takes out that high there. So now we have a consolidation. We've got a wick above the high though. Usually I like to see bodies get above a wick high. So if that's a wick high there, body gets above it. Get back in here, offload your wrong. If you're on the wrong side of that, take your portion of your trade off here, or take that trade off there with a very minimal loss. Unless it takes you out now. So now it's just kind of looking for, are you on the wrong side? And all this chopping here, you'd say, no, I want to get out of here. Cut my losses. Did not react the way I wanted it to. So as soon as it gets back into that area there, or this little fair value gap here, you take the trade and you go delete, remove. So we just hit the rejection block here. We're under 50% of that wick. I think that's going to take that stop, that imaginary stop up there. So the decision is to get out of this trade, this little paper trade here. This is where you start to realize, ooh, I'm on the wrong side of this. We found support at this inversion fair value gap. The mean threshold's holding it. We create a fair value gap here. If we return to it, you get long on that typically. Not inside this mess, but if that was boulder up there, outside of this consolidation, I'd like that. And then the moment it returns to the open or the high of that consolidation, you get long on it. So now, as soon as it takes my imaginary stop loss, that would be the loss distance there. We're looking for it to come back into this range, yeah. We're looking for it to come back into this range here so we can pretend to take our pretend trade off to cut a little loss, to have a minimal loss. Now we took the max loss. But the moment we saw this happening, that's where we were kind of hoping that would just dip down a little bit more just for us to close out. So we were already looking to get out of this on that candle there. Didn't get it, but that's okay. It's a pretend trade in a paper account. That's why you don't mess around in consolidations. I got 10 more minutes here this morning. If there's anything specific you want me to look at, just let me know. Oh, there's that, there's the high we were looking for earlier. See that? That fair value gap right there? We're just coming into it now. Ooh, let's have a look at this one. NASDAQ. Yeah, right there. Return to the, remember we're talking about the Asian, wouldn't it be great if we could return to the Asian low? We didn't get it here, we didn't get the order block. Then all of a sudden, now we've got this reversal on the open. Are we going to come back to the Asian range low here? And then react off of that? Ooh. Or here's where my eyes are going here. Sorry it looks so choppy and blurry. It's just because all these colors are overlapping here. I got two ideas here. One is Asian range low, which we just hit right there. Reacted off of it. That's what we were hoping for way back here. We've hit that. Is this the reaction? Is this the turn point? To continue back down. The next area is look for 50% of that range, which would be right about inside there. Midpoint would be about that dotted line there. New York session open. Look for that as a potential area of sensitivity if we push up one more time. But if this is a reaction now that we're getting, look for the 1 minute. And as my friend Lauriston would do, maybe down on the 5-second chart, looking for some confirmation here. 30 seconds. $15 seconds. Breaking structure. Oh, did we hit that? I think that's the Asian range low right there, is it not? So keep your eye on that area there, or order block here. Fair value gap fill, mean threshold, sorry, consequent encroachment. Right there, there's the body. Inside that little imbalance right there on the 15-second. I'm on the 15-second chart now. So we're seeing how we react off this order block here. Yeah, there you go. Got a little imbalance right there. Equal lows now. Now you can go on a dive. Go for a dive. Order block here. Support. Oh, I can feel my buddy Lauriston just like chomping at the bit with this one. My concern is this hasn't been hit. That was the Asian ranges there. Let me just confirm this. Let me go to a 5-minute chart. Where is the Asian range? Oh no, that's the Asian range right there. 16,542. 16,542. 16,542. Yeah. I guess we hit it. Now you want to see this break below this. Come back and find some support here. Inside that inversion fair value gap we got going on here now. On the 30-second chart. This takes out the 10 o'clock high. Now we have a continuation on the downside. Hey, Lauriston, buddy! We were just talking about you. Nah, the ranges are too choppy, he says. Waiting to see cleaner price action. Fair enough. Yeah, it is choppy. It's choppy like crazy. Let's go to the 5-second chart. I like the 5-second chart. It is choppy on the 5-second, but it's still a little more predictable. You know, that was a little more readable there. We were looking at this here. as the potential reversal or confirmation. Optimum trade entry big time there. Off of a breaker inside of a fair value gap. Hello, look at that, right off that breaker. Last up close candle before running below these lows. It hit it like big time. Right on the money. Breaker inside a fair value gap. That is a major, major load up the house trade. We get a return. We have another breaker here. Didn't quite catch it here. Just short of it there on the 5-second. Consolidation. Breakdown. Return to the base of the consolidation. This is a mitigation block. Here's another breaker. Reacting off of that. Fair value gap. Equal highs. This guy here still hasn't been hit yet. So look for that to run up into that. But if you're doing like super sniping stuff, order block, aiming for your lows, again, they're not big handles, but they're, you know, just coming back up into this breaker right here. From there to there. From there to that low alone is 39. Well, that's 15 handles right there on a 5-second chart. Little imbalance right there. Inside that breaker. Oh, we're eating through that. Mean threshold of that guy. Back into that consolidation or that fair value gap again. Boom! Right through it. Cleaned out the highs. Now we've hit that 42, 1542. What is that Asian range? Low. I wonder what the exact money is at. 52.75 is the low. And what are we hitting? 52. What's the high on that? 42.75. There you go. That's exactly right off the Asian low. So go to the 5-second chart and you'll see a big, look at that. Right off 16.5, 42.75. So that was the actual high, not that one. That was the Asian low. And look at that reaction. Wow. Imbalance here. Well, it's 9 o'clock. Time for me to head out. I've only got a few days left with my family, and then next week when my wife gets back to work, we're going to start getting busy in the charts a little longer. We'll stick around a little longer in there until we get to the middle of January, near the end of January, when things start to settle down. And see if we can't start to see some better price action. That was fun. On our imaginary trade, we lost. We didn't get a chance to kind of offload our paper position, but we did get some nice precise entry right now on that, not entry, but nice precise return to the Asian range low. If that holds price right now, on the 1 minute, you got fair value gaps here, equal lows still to reach for. It's way too choppy to trade any of this stuff. But things to keep your eye on is here, equal lows. Look for the discount portion of this now if that's the high. If it's not, and we do continue for the further upside, look for a return to the New York Open, which is this breaker right here, and a fill of that fair value gap there. On the hourly. But with that said, I am out of here. It's been kind of fun. Not a lot of big trade potential. It's non-farm payroll week, so it's kind of fun to always look at the charts and read them and see how we're getting some reactions off of key levels. But other than that, you guys have access to the Breakfast Club over there on the Telegram. Don't let anyone ever dull your sparkle. I like that. Thanks, Derek. So anyway, you have access to the, you can chat, drop whatever you want over there on the Telegram. Those of you who are interested in joining the Telegram Breakfast Club, having a community of people you can chat with, that's available to you. Just go back to yesterday's channel and you'll see the link in there. And if it's not, I will link it again tomorrow. But until then, thank you very much for popping in. And sorry the markets are not as being as crazy fun as we'd hoped. But hey, it's the beginning of the year, so we can't expect a heck of a lot. We're getting a beat on it, where it's headed. So I wish you guys all the best. I will see you again tomorrow for non-farm payroll. We're going to be watching and just reading the tape. If you're not into that, then I guess I'll see you next week. But until then, be safe, have fun, take care of each other out there. It's a lovely world. It's not a rough world. It's a lovely world. It's got some spots in it, like we all do. Just make your part of it as nice and kind as you possibly can. And I will see you folks again tomorrow. Much love. Take care of you.